that crypto is going to go up and to the right for the next 30 years. We're invested in 43 of the leading crypto VCs in the world. We want to own everything. What is crypto? To me, it's a series of technologies. It's blockchain, smart contracts, zero knowledge proof, that all combine to enable decentralization that is powered by community. And so I've been thinking about community for 20 years. I had run the world's largest social network from 03 to 06 before MySpace.
In Bitcoin since 2013, named as the Wall Street Bitcoin expert.
We don't think anybody knows who the next Facebook or Google is going to be. The first of my 7 thoughts on crypto after 3 months down the rabbit hole, which I still believe to be true today, and that's that nobody knows anything.
Hi, my name is Violetta Chekan, or simply VC. Indeed, I am a venture capitalist. I have 12 years of experience in startups and early stage investing. And this is season 2 of Web 2+1 with VC. And today we have Lou Kerner, who is a founder, investor, crypto thought leader in Bitcoin since 2013, also founder of CryptoOracle Collective, founder also of CryptoMondays, partner at Blockchain Coinvestors. Hi, Lou.
Hey, Violetta.
It's so nice to have you here on the podcast.
Well, thanks a lot for having me. I look forward to seeing you in person in Lisbon soon.
Oh, yes, of course. Yeah, so the first time we met, actually, it was on CryptoMondays, right? So that's, you've been visiting Lisbon. How many times have you visited already CryptoMondays in Lisbon?
6 times. There are 57 chapters, active chapters around the world. Yeah, I've been to 34 of the chapters. New York is the one that, that I run now with the CryptoOracle Collective, where the others were completely decentralized. So there's a great crew running it in Lisbon, and I love Lisbon. It's a great community, and definitely it's the one I've been to most in Europe.
Amazing. Would love to hear a little bit more about also the community. Let's go through your maybe journey a little bit. So in the beginning, and then let's talk about the state of crypto this year, and also we will talk much more about the community and its role in Web3. And we will have also some fun with some of the questions, because in the season I prepared this the cards with some fun questions. Yeah. So, okay. So let's start. You just recently published one of your blog posts in Medium that you have been 7 years, 24/7 in crypto. I would like to ask you more on like a deep question, how your perspective has changed over these years on the crypto space.
Sure. When I saw the crypto light, June 29th, 2017, what I saw was, for the first time in history, we have a tool set to solve for the community instead of the man in the middle. And earlier in my career, I had run the world's largest social network from 03 to 06 before MySpace, called Bolt. And so I'd been thinking about community for 20 years. I'd learned a few lessons. My view on community has held very consistent. I go around giving a talk, I think you've heard it before, called 10 Thoughts on Community. And I start with even defining community. What is a community? And to me, a community is an ecosystem where, when it works, everyone gets more out of it than they give. And who doesn't want to be a part of that? And, I go around the world to ecosystem summits. Because I want to feel the community, viscerally feel the community. The highlight of my 7 years, it was my first ETH in 2019. It was at the depth of that bear market. ETH was under $100. And there were only 2,000 people there, but it was 2,000 of the smartest people I had ever met. And, we were all there wanting to change the world. What I've learned in 7 years of community is that there's a lot of different communities, and that when people join the communities, they can go and they can get a lot of different things out of them. I think one of the big mistakes, quite honestly, that I made was I went to Solana Breakpoint in 2021 for their first ecosystem summit. And it was at the peak of that bubble. And a lot of great people, a lot of smart people, but I really got that the majority of the people there were there for the money. And that's fine. I love people who are here for the money because, money comes and goes. And most of those people, when the money goes from crypto during the bear markets, most of those people are going to leave. And when they leave, they're going to leave a lot of money behind. So we should all really like them. My question with Solana was, okay, what is their community going to be like during the bear market when, so many of their people are obviously going to leave? And, I missed how many people did stick around and did build through the bear so that when we came out the other side, they were posed for the massive breakout that they had.
And what is your perspective on like in general the ecosystem, like in terms of like building during these 7 years?
I would say that I remain very bullish long term. I would say that the biggest disappointment in 7 years, we have problems to solve. Really, two problems that we need to solve for decentralization, to really be broadly applicable. One is token economics, and the other is governance and consensus. And in 7 years, we've actually made very little progress on either one of those. I remain, very bullish for really two main reasons. One is that, a lot of the best and brightest people in the world continue to come into crypto to help us solve our problems. And the second is what we're competing against, centralization. The bar is so low. So this isn't about perfection, right? And I think that's a problem is a lot of people complain, oh, it's not perfect. It's not perfect. It's not perfect. It doesn't have to be perfect. It just has to be better than this really low bar that we're competing against.
And what about your achievements? So during these 7 years, what are your top 3 achievements? Could be related to crypto, can be not.
I'm definitely proudest of the communities I've built, most notably CryptoMondays, which we started January 8th, 2018. I'd been a longtime meetup shareholder. I just wanted to hang with other people as passionate about crypto as I was. Our first meetup was literally the peak market cap day for 2 years. We were actually celebrating the beginning of crypto winter, and we had 300 people at the first one, 350 people and 3 TV crews at the second one, when I decided to blow it out around the world, but decentralized, run the Crypto Mondays that you want in your city. When I started, we had no rules. Because we're decentralized. So why would you need any rules? But after 3 months, I needed to institute one rule that still holds today. And the one rule of Crypto Mondays is you are not allowed to email me and ask me permission to do something. What part of decentralization didn't you understand? And, we're now 57 active chapters around the world. And, it's a thriving, vibrant community. I'm pretty sure more people have met their co-founders at Crypto Mondays than any other event around the world, and I think it's done a lot to help build the community around the world. And the business model of Crypto Mondays is the more you do for the community, the more the community takes it, multiplies it, and gives it back. And I have been massively overwhelmed by what the community has given me back, as has everyone who's run a successful Crypto Mondays in their city.
Yeah, and tell a little bit also about your overall achievements. So in 2013, you've been also named as the Wall Street Bitcoin expert, right? Tell a little bit more about your career path.
That wasn't really an achievement. So, my genesis story of getting into crypto, a very close, brilliant friend of mine called me in late 2013 and said, hey, Bitcoin's a thing. Don't be an idiot. Click. And so the first thing that I often do if I want to learn about something is I'll hold a conference call and I'll get the smartest people in the world on the call to teach me about it. Because I bring an audience that they want to reach. So in December of 13, I threw a conference call with 4 guys who are all now billionaires. Wences Caceres, who was ground zero for crypto in the Valley. Chris Larson, one of the founders of Ripple. Barry Silbert, the founder of DCG. And I sent out an invite. At that time, my email list was much smaller. It was probably only about 3,000 people. And the day of the call, it was actually I've done this, had more than, way more than 100 webinars over the years. And that was the only one in December of 2013 that the Wall Street Journal live blogged. And they live blogged it by saying, hey, we're on a conference call being held by Lou Kerner, Wall Street's Bitcoin expert. So, my first minute in the industry, and I was coined the Wall Street's Bitcoin expert. And if the Wall Street Journal says something, a lot of people believe it. So a few months later, I was keynoting the largest crypto conference in the world, the Bitcoin NYC in 2014.
But what happened next? Why you're saying that you're 7 years in crypto? Have you left after 14, or how was your perception with?
Yeah, in 2014, I probably spent around 10% of my time looking at crypto, trying to understand it. I held multiple other webinars. And the whole time, though, the price was going down. And I think it's a lot harder to see when the price is going down. And so after a year, I really stopped spending much time in crypto. But during that year, I had learned a lot, such that on June 29th, 2017, I actually held a conference call on ICOs because they were going up and to the right, and I didn't quite understand what was going on. And again, I had 4 speakers. I had Tezos, who earlier that week had the largest ICO in history, 150 million. I'm sorry, Bancor had the largest one at 150 million. I also had Tezos, who then the next week had $175 million ICO. And it was on that call that Olaf Carlson, we said something. He's a VC in the Valley. And it was, and I saw the crypto light. And now know there's a term called the Gestalt shift, which is one moment the world is one thing, and then you get a new piece of information, and then the world is something completely different. And that's what happened to me.
Yeah, I think it's very difficult to see like an early stage of technology something. I also looked at Bitcoin like 2013, 2014, but the problem was like, I think also no one was understanding how can you really build something with this technology. And it's like, for me, my like changing moment was like 2015 when the smart contracts came with Ethereum. So for me, that was like, okay, now we can do something about this. So this is, I think it's, everyone has its own journey, but it's a very interesting journey for like your journey from the Wall Street expert, and now like you're one of the main crypto thought leaders, and also one of the top in Medium to follow. So actually, Medium, before even I followed you, it recommended me to follow you. So yeah, so you're like one of the main top.
Oh, I was just going to say, I mean, one of the fun things in my journey is when I saw the crypto light on June 29th, 2017, I saw the future, but it was fuzzy. And I was literally in a manic state for 3 months as I was really trying to understand, deeply what was going on and have a construct. And it took me 3 months. I tried to talk again to the smartest people in the world. A highlight of that time was I got to be friends with Cathie Wood, who was the original institutional investor in Bitcoin. And after 3 months, I wrote my construct on Medium called 7 Thoughts on Crypto After 3 Months Down the Rabbit Hole. And it was the most read thing on Medium tagged crypto for 3 days, after which, according to Medium, I was the 3rd most influential crypto blogger in the world, which I say did 2 things. 1, it made me a guy in crypto, which was awesome. And 2 is it proved the first of my 7 thoughts on crypto after 3 months down the rabbit hole, which I still believe to be true today. And that's that nobody knows anything, that we're at the beginning of this brand new industry. And the only thing I'm sure of is whatever it turns out to be is different than what anybody thinks it's going to be.
Yeah, I think it's it's very interesting thoughts about this. And you're traveling a lot, right? So you first of all, you are co-founder of CryptoMondays, right? So you know how is it like the community going on around the world, and it's very different trends around the world as well. And I would love to hear your like thoughts on like what is the current state of the crypto and blockchain market.
In my view, at a macro level, it feels to me like we're in the internet. I was there at the beginning of when the internet really started to explode. The internet, the very first email was sent in 1969. It was LO. They wrote log off, but it crashed after LO. And it took about 25 years for that technology to get to the point where when Mark Andreessen brought us the Netscape browser, there was that infrastructure that was already built over those 25 years, such that all of a sudden now everybody could easily use the internet. And for the next 30 years, literally the internet has been going up and to the right. Now, that the 30 years, the equity value of internet companies has been in bubbles and crashed in bubbles. But use of the internet has been going up and to the right. And so to me, that's where we are. We're still in that pre-Netscape phase where we all know that it's so hard to use this technology. Nobody, the number of people on the planet who actually use this technology rounds to zero. It's the same as the number of people who used internet technology after 25 years. It rounds to zero. And so, what I'm here waiting for is when somebody builds a product that A, people want, and B, they can use without reading a book. And when that happens, that's when we're going to start to go mass market like the internet did post Netscape.
And you also as a partner in Blockchain Coinvestors, right? So it's a fund of funds. So you invest in funds, right? So that means that you have a very broad idea of the thesis of the different VC funds. So first of all, how do they approach the crypto volatility market? Because it's very volatile and we have these cycles. And the second, I would love to know also, what is the investment thesis now? What is the most interesting thing to invest?
The core investment thesis is very disparate among the funds. Again, at a macro level, what we're trying to solve for today, we're invested in 43 of the leading crypto VCs in the world. Through those, the VCs that we're LPs in, we're investors now in more than 1,000 crypto companies. I think we indirectly own pieces of more crypto companies, I think, than anybody else in the world, which is exciting. And what we're solving for is, again, like the internet, we think that crypto is going to go up and to the right for the next 30 years. But we don't think anybody knows who the next Facebook or Google is going to be. So we want to own everything. And, we are solving for trying to get in the seed round of every crypto unicorn. So when we meet a new VC, the main question that we're solving for, okay, is this guy or this girl, this person, are they looking at the world or in such a way or from such a place that we think that there's a good possibility that they're going to get access to the seed round of a crypto unicorn that none of our other VCs are going to get into. Because once a company gets to its B or C round, we're generally have 3 or 4 VCs that are, we're invested in that company. But the key is the really massive returns come from the seed round of unicorns.
Yeah, it's very, very interesting. Also, I saw one of your talks, and you said that you like indexing, right? So that is how you invest also, in that's why you're fond of funds.
It's not me I do like indexing, but I think I say it in the broader context of indexing is the massive financial trend of our lifetime. And it will continue to be because it turns out that humans generally suck at investing. And more than 99% of us, way more than 99% of us, would be far better off indexing than trying to pick individual stocks or tokens.
Very interesting thought. All right, so I would love to go a little bit deeper with your perspective on the market. So in one of those on the posts where it's you published the seven thoughts about the crypto of the 7 years, right? There was something that I wanna explore. So you said that we are in a fucking war for the soul of the metaverse. why we are in the war and why do we need to fight for it?
Sure. And it's interesting because, again, even this thought is evolving. I first started writing before I saw the crypto light. Kind of two seminal things happen. And the first was in January of 2017, I started writing about something that, I saw that I thought was incredibly important and alarming. And what I saw was, I ran an analysis that showed that the majority of all tech market cap of the top 100 tech companies, that more than half of all value created was from 5 companies, from what I called FAMGA: Facebook, Apple, Microsoft, Google, and Amazon. And their share of tech market cap was going up and to the right. And that's great for them and their shareholders, horrific for many, many reasons for the rest of humanity. And it's accelerated far more than the alarming amount I thought that it was going to accelerate at in 2017. And so, where we're at now is there's actually been a 6th one that's been added, NVIDIA. And if you take those 6 companies over the last 10 years, they've accounted for more than 70% of all tech market cap of the top 100 tech companies. So in fact, we live in a monopoly, in a world dominated by these 6 companies. Great for them and their shareholders, horrific for the rest of humanity. I mean, NVIDIA alone is worth more than the entire stock markets of Germany and the UK. And so, in my mind, I saw the crypto light in June 2017, and I really thought that crypto had the potential of being the biggest thing to happen in human history. And then about 4 years later, I saw something even bigger. I saw the metaverse. And I really think that the metaverse is the big thing that's going on. And for me, when I use the word metaverse, when you're on the phone, I think you're in the metaverse. And if you think about our time, I'm pretty sure, again, for the rest of my life, we're going to be spending a higher percentage of humanity's collective time every single day is spent in the metaverse, and it's getting closer to the Oculus Rift a little bit every day. And that's going to be a trend that's going to continue for the rest of my life. The question is, who is going to control that metaverse, right? I think where my fear is, it's going to be FAMGA, or now FAMGAN, because I added NVIDIA. And the problems with that, it starts with all of decentralization, in my view, starts with our identity, right? How do we get to identify ourselves to the rest of the world? And up until today, we are largely identified either from the federal governments from the governments under which we live. We all have a passport, and that says, who we are, and that allows us to travel around the world. Without that passport, you can't go leave your own country. And the other people who control our identity today are FAMGA, right? We go all over the internet and we largely just log in using, our FAMGA identity, whether it's, Google or Facebook and that's horrific. And so the question is, are we going to control our own identity at just the base layer, or is it going to be controlled by FAMGA? And to me, it feels epically like Star Wars. And FAMGA is the Death Star and we're the Alliance. And it's really fun to be a part of the Alliance. The only sad part of that analogy is I think most of the time the Death Star wins. And where I'm involving is I really think the metaverse is still a very difficult concept for most people to understand. So, another way of thinking about it. And when I say the metaverse, the reason that FAMGA is so well positioned to control the metaverse is because it's all about data. And they have more data so much more data than anybody else. And that's also, it's the same thing as AI. And that's why FAMGA is so well positioned in AI, because AI, the large language models are all about, who's got the most data, and they have the most data. And so, you can think of the fucking war for metaverse. It's the same exact war as the war for AI, right? It's the AI is going to control the metaverse.
Yeah, and it's very interesting how you do the parallel with also AI and data, because data is actually like blockchain. What gives you, right, and decentralization is that the possibility of ownership of data, correct? So, and then AI on top of this, right? So you need to feed with the data AI, right? So, and that's how you have these all large models being working, right? And if these companies are controlling your data, so they are the ones also controlling the AI, like right in this sense. So so I think it's very important for people to understand, because I think that most of people don't even think about like how do they once they are going into internet, like who is the owner of the data. So moving forward, I would love to know a little bit more of the trends. So I know that you mentioned already some of the trends, but I would love to hear from you. So where is 2024 is like for this year, like are the biggest trends are?
Sure. I wrote a piece, I think in May, where I said, just some thoughts after the first 4 months of 2024. And I wrote that I thought that the biggest trend of 2024 was at that point, and I think still is Bitcoin L2.
Why is it so?
Because, obviously, Bitcoin L2 has been around for a while, but as a narrative, it picked up dramatic momentum, as we got more and more companies, entering the Bitcoin L2 space and talking about, Bitcoin DeFi that hadn't been a topic of conversation. I mean, it's gone so far as, I've heard some of the smartest people that I know in crypto share their belief that, over time, ETH is going to be a Bitcoin L2.
One of the thoughts also of you that was it's all about community, right? So that's that you said about. So actually, I think it was even 7 years ago you said that, right?
Yeah, has been my belief that, to me, when I define crypto, what is crypto? To me, it's a series of technologies. It's blockchain, smart contracts, zero knowledge proof, that all combined to enable decentralization that is powered by community.
Let's talk about the community. So why is it really important in Web3? Why do you believe? And I know that you have a very great definition of what is community. So let's talk about a little bit more in this and deeply in the topic.
Sure. To me, okay, well, what is Web3? Which is, and to me, Web3, I use the words Web3 and crypto interchangeably. I talked about it from kind of a technical standpoint, but from a more philosophical standpoint, to me, Web 2, if you think about the Googles and Facebooks of the world, they are capitalist companies, and that's what they were set up to do, and they exist to maximize profit, right? They, on their conference calls, brag about their profit margins, right? How much money they make off each of their customers. That's what Web 2 is. To me, Web 3 is about how much utility can I give my community members? And the best communities, the best projects give their community members, massive utility, right? That's what Bitcoin does. Bitcoin gives people massive utility. Not only, is anybody who's held Bitcoin for any amount of time made money, which obviously is super important, but, I personally get massive utility from really feeling like I'm making the world, helping to make the world a better place, for everyone, including my 3 kids.
What are the most important strategies that you have learned from building community?
So again, it's all about giving people utility. And to me, communities can scale. I say highly correlated to what I call value delta. So in other words, a community manufactures something for community members at a cost of X, right? Community members get it and they value it at Y. And the bigger the difference between X and Y, the bigger the community can become. And that's why, if you think about it, the biggest communities in the world are the things with the biggest value deltas. And we have a collective name for those things. We call those things religions, because they produce a book at about 25 cents and people get it. And how much is salvation worth? Right? So they have massive value delta, and that's why religions have scaled to billions of people and lasted thousands of years.
How the new project from coming from Web3 can start its own community.
Right. How do you give utility to your community members? Right. What most people focus on is giving them money. And again, money's a great motivator, but there is no value delta in giving people money unless you can create money out of thin air, right? Which is what a lot of projects do, right? So the DeFi project comes, they create these tokens out of thin air. The tokens then have value, and they're able to give these tokens and incentivize people to come use their DeFi protocol. Obviously, the problem comes when they stop giving people, that money. Then those people leave to go to the next DeFi project that's giving them money. So, by giving people money, it gets them into the community, but I don't think it can be the only thing that keeps a community together over time, because money comes and goes. And when the money goes, those people are going to go. So the question is, what other things can you give your community members in addition to money or instead of money that will incentivize them to do things that help the community become more valuable? I discovered value delta when I was running Bolt, the world's largest social network, and we peaked at more than 20 million kids in 2006. And we had advertisers, Fortune 500 advertisers, throwing money at us if we could get the kids to actually interact with the advertising. But we couldn't pay them enough money to incentivize. What we ended up doing was we ended up creating a badge program. And the badges, they would earn badges for doing specific things. And the badges would scroll on their around their profile, conferring status in the community. Status in a community, free to give. And some of the community members, not all of them, but in our case, more than 10% of our community members would do anything to earn a badge and get this status. And for us as a community, that was massive value delta. We were able to create a lot of value by giving people, for the shareholders of Bolt, by giving our community members status.
Wow, that's it's really cool story. So you have been already in this for really a while. So what I'm hearing here, some of the metrics. So I would love to ask you, what are the most important metrics of the community that any project needs to look for?
So I have a very simple belief about communities, and that's that communities are either growing the engagement of their community members, or the community is dying. And so it's about, how do you continually give your community members utility that get your community members to increasingly engage with your project. And that's an incredibly difficult thing to do. Very, very hard to achieve. Very few projects are able to achieve that. One of my great stories is when I was running Bolt, was the first person to call Zuckerberg and offer to buy Facebook a month after he launched. Fast forward to 2009, I bought some secondary shares and wrote a Wall Street style research report about it, because, oh my God, I saw Facebook. I'd been a Wall Street analyst for the first third of my career. I'd run the world's largest social network. I actually felt that I was probably the smartest person in the world to understand what it was worth. And it was actively traded at 16 billion in the private markets. And I thought it was worth 50 at the time. And I was a big bull on Facebook, continued to write on it for 8 years until they reported their Q4 2017 earnings. And for the first time in their history, their engagement went down. And on the conference call, they said the reason that engagement went down for the first time in Facebook's history is we decided to stop people from doing the number one thing that people want to do on Facebook: read fake news. And then it started going up again. And I was pretty sure they were allowing fake news. And I didn't become bullish. I became bearish on Facebook. I didn't become bullish on Facebook after that, because I really felt that, that having people spend their time on Facebook reading fake news, which is what the algorithm literally does. It feeds up a never ending stream of fake news to push people to the edges, because the algorithm decides, are you leaning left or are you leaning right? And whatever way you're leaning, they will give you fake news to make you go more and more to the right or more and more to the left, because the more radicalized you are, the more time you spend on Facebook, and that's what they're solving for. And while from a business perspective, I realized that that was positive, from an ethical standpoint, I think Zuckerberg is evil. And you can make a lot of money giving people, selling people something, even if it kills them. But I don't think it ends well. It reminds me of the Sackler family. Those were the people who brought us the opiate crisis, and they made, tens of billions of dollars, but it did not end well.
Yeah, and it was 2017, so you became bullish on Web3 and the communities in Web3 and decentralization.
Exactly. I thought that this is the potential to be an alternative for the people who want an alternative. And it doesn't have to be the whole planet, right? How many people own Bitcoin? It really rounds to zero, and yet we're at $67,000 or $64,000, whatever it is. I think all we have to do is get to a few percent. We've got $1 million Bitcoin. And what happens if 10 or 20 or 30% of the planet adopts it?
Yeah, we need to grow a lot, and actually you are doing also the work on that. And I would love to also, like, before we go to the end, I would love to also chat with you about this. So you recently also launched the accelerator. So you are actually bringing and new projects to life, let's put it like this. And you help a lot and you support, and I know that you have a tremendous experts with CryptoOracle Collective. You also yourself is amazing investor, amazing visionary as well. So tell a little bit more about this. So why have you started right now the accelerator? What was the rationale behind, and how do you help the projects to grow?
A few things. First, my first startup, we bought the top level domain .tv from the island nation of Tuvalu for $50 million in 1999. And that was started out of the Idea Lab incubator in Los Angeles, the original internet incubator. I was the 55th project, started out of the incubator in January of 2000. In February of 2000, they raised $1 billion cash at a $10 billion valuation. It was an awesome innovation ecosystem. And I really became fascinated with incubators and accelerators. And I went around the world visiting more than anybody I had ever met. I was a venture partner at Barclays FinTech Accelerator in Tel Aviv. And in 2015, I did a TEDx talk on corporate accelerators. So I've always had an interest in accelerators, and I've also always been attracted to shiny objects. And so, most of them have been shiny. And when I saw crypto, I said, look, this is so shiny. I know there are going to be other shiny things, but I just want to do crypto for the next 30 years. And so when new shiny things come up now, like AI, I don't leave crypto to go do AI. I bring AI to crypto. And so the genesis of the accelerator was when Eric Bravik joined the CryptoOracle Collective, which is a decentralized Web3 advisory service. We started in July 22 with 24 experts. We're now over 250 Web3 experts. And Eric joined as head of AI for the collective. And we really shared a belief that the intersection of AI and crypto could solve a lot of problems, including, what I mentioned, I think is our biggest problem, which is decentralized identity. And so, we identified 7 problems that we thought could be solved by the intersection of AI, and went on a search for companies solving those problems. For cohort 1, we found 10 great projects. We just last week finished the 10-week program, 3 classes a week. We had 30 great classes with lots of really amazing guest speakers from around the ecosystem. And our demo day is on June 26th. Yeah, and then we start recruiting for cohort number 2, which starts in September.
Awesome. Do you invest? Do you invest also in projects, or what is like the business model?
Yeah, so we get a percentage, a small percentage of the companies. either equity and or tokens, depending on, how they capitalize themselves. And, for going through the 10-week program, finishing up on a demo day, hopefully, a number of them are able to raise capital post the program. A lot of them are joining the collective too, as community members. And so, the involvement with the collective doesn't end, when they graduate the accelerator.
Tell a little bit more in terms of business model and community, because I know that there is also like the returns that the startup founder does. It's collective.
Right. So the collective is tokenized. So when we get paid by projects, right? The idea of the collective was to help more people work in Web3, because there are lots of awesome projects, who are looking to hire people, and lots of great people who want to work in Web3. The disconnect was a lot of the projects want to pay in illiquid tokens and equity, and most people have rent to pay and get hungry. So the collective can take in illiquid tokens and equity. And if we put $100 of illiquid stuff in our treasury, we mint $80 of our own liquid token that people can use, to pay their rent and such. Or they can hold on. Nobody takes the other 20%. It just accrues to the token holders, and the collective members are the token holders. So that was really the genesis. And with the accelerator, the collective earns, for providing all of the labor to the accelerator. The collective gets 20% of everything that all the tokens and equity that the collective makes, and that 20% will get distributed to collective token holders. The 10% of the accelerator's pool of tokens and equity actually goes to the cohort members themselves. So they're all incentivized to help each other. And, and even if you bring a project to the accelerator and nothing happens with your project and it eventually folds, you might, be able to make a lot of money from, the small percentage of the accelerator tokens that you were granted as a cohort member.
Yeah, I think it's a very great model. I really love it, because I always remember the university, in the classmates that you're with, you're always helping. And then I had also several executive programs as well, and it's really once you're together, passing through some of the challenges, you're really bonding, and you really want to see each other's success, right? And then you want to be happy as well. And it's also, I think, a great concept that you can celebrate the success, even if your startup is not successful, of your cohort members. I think it's fantastic. It's fantastic.
Yeah, it's I think a lot of business development happened between cohort members.
All right, so let's go for the fun part. So I will just mix these cards. All right, so you will have you will need to say to me stop once you think that I can pull out the upper card. Okay, so and then you will need to answer to the question that you will get. Okay, some of them actually quite fun questions, so don't take it seriously. Some of them are more personal, but let's have fun. Okay, so tell me stop once you want.
Okay, stop.
All right, so that's a nice question.
What are 3 things Elon Musk can buy in Rune? Well, it would be great if he were to buy and ruin any of FAMGA, Facebook, Apple, Microsoft, Google, Amazon, and Nvidia. But I think they're all too expensive even for Elon.
It's actually quite interesting question in terms of what he can buy. What can he do?
Yeah, I mean Tesla's I think one of the great meme stocks around. It's not you can't get to its valuation using any credible metrics today. But people want to hold part of Tesla, and that's really in my view the magic of Elon. In addition to his brilliance.
Yeah. It's very interesting how it can, like, the influence of the person, how it can be transformed also, like, to the value, right? So the stock's value in this case. Okay, so let's do the other one.
Stop.
Okay.
You find yourself owning a quantum computer. What problem do you solve first? Well, I think you know. Decentralized identity.
Yeah, so that is easy. That is easy. Yeah. Okay. Let's do one more. Let's do one more. Let's do one more.
Stop.
Okay. Okay. This is an interesting one as well.
What's the most unusual but useful advice you ever received? I had one panic attack my whole life, and that was the night before I got married. And I was in my parents' bedroom bawling about midnight, and my dad took me downstairs, and he gave me the advice. He said, son, he goes, what you have to understand about marriage is the first 20 years are the hardest.
The first 20 years.
It did not calm me down.
Okay. Did you make to 20 years, might I ask?
Yeah. And he lied to me. It did not get any better. I did make it to 30, though. Got divorced before then.
Okay. Yeah, but this is it's a cool advice. It doesn't get any better. Right, but what can you give as an advice to entrepreneurs in Web3?
You've got to have an edge in what you're doing. And I think people don't appreciate, I think, how hard entrepreneurialism is. I think most people, are shocked at how hard it is for everybody all the time. My favorite book is The Hard Thing About Hard Things by the founder of not Andreessen, but the Z of Andreessen. I'm sorry, H of Andreessen Horowitz, Ben Horowitz, and it's just 300 pages, of it's really, really hard. And I think one area where the vast majority of entrepreneurs can benefit from is by making more mistakes, by moving faster. I really believe that the biggest difference between the of all the now have directly invested in more than 100 companies, and I don't think that that's statistically significant enough number that pattern recognition is a thing. I think it's just a bunch of random stuff. It's not a pattern. But that said, the biggest difference that I've seen between the winners and the losers is urgency. The feeling, the need to get it done today, now. Don't wait till tomorrow. Don't take your time analyzing it. Do move forward. I think most entrepreneurs vastly overestimate the downside of mistakes, and they worry about mistakes, and so they don't do stuff out of fear of a mistake and the massive cost of a mistake, when the downside of that mistake is actually, I think, very little, far more often than not. There's actually a great Elon Musk quote I saw just a couple weeks ago that failure is irrelevant if it's not catastrophic.
Yeah, I think it's a great quote. And let's finalize on that one. It's fantastic interview. Thank you so much. Thank you for sharing your insights. Amazing.
Yeah, I said thank you for the interview. You obviously did a lot of preparation.
Yes, of course. Well, thank you so much, and for your time and for your knowledge. So I just would like to encourage also the audience to follow you and to be a subscriber of your amazing newsletter. So I will leave down some of the links, and also about the CryptoOracle Collective. The next cohort will be in September. So please check out, and also. And also I would love to also encourage the audience to like, comment, and also share the video, because it's fantastic, and it's with also lots of very actionable tips from Lou Kerner. Thank you.
Okay, thanks, Violetta.